The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got 24 minutes to go until the start of trading and the opening bell, and we get some volatility to the downside. Markets, we trade to basically the close of action on Friday. Now, you didn't get the dip that we had after hours on Friday, but on S&Ps, we have tensions with China hitting the markets yet again. We reach a low of 66.05 overnight. You're talking about a move, folks, from 67.12, 107 points in the S&Ps from about 10 o'clock to the lows this morning at 7 a.m. We're just off those lows. S&Ps negative by 56 points or 0.8%. NASDAQ 100 we're down by 1.1%, nearing the close of Friday as well, besides that little acceleration after hours. Off 268 points or 1.1%, 24,653. Dow off by 0.7% or 346 points, 45,952, and the Russell off by 1.2% or 30 points in the red. The VIX, VIX spiking yet again. We're back above 20, 21.58. We're right where we were on Friday, and you actually got more volatility in terms of the VIX eclipsing Friday's high with volatility premium spiking. Crypto's having a moment, and it's not a good one, folks, okay? Bitcoin down to another 4.5%. For some context here, Friday's lows were 116 on the close. We're at 111,000, man. You check out the daily on Bitcoin. Yeah. How about getting back to almost where we were trading at? December of 2014. December of 2024. You back it up on a weekly. And yeah, we're coming back to test this area of what was resistance. You break through it. Now it's support. That area at about 108,000 on Bitcoin. You're down by 4.5% right now. Ethereum off by 7.5%. Crypto's got a few holes, folks. That Friday capitulation, the wipeout in many of the altcoins, right? And many of the coins that were top 100 market cap coins, but not Bitcoin, not Ethereum. People got wiped out in tons of equities. Tons of coins on Friday, and yeah, it's reverberating. As in, check out Ethereum and check out Bitcoin, because the bars on Bitcoin, man, there was no reprieve yesterday, right? We just traded down from 127,000 to 110,000, and for you hodlers out there holding on for dear life, you better hodl, man. You break through this area that we're at right now. Okay, this 107 area, 108, this area that we've had, that's kind of that visual area of support and resistance that chops around right in this area right here. Yeah, critical area, right? The highs from last year. Nonetheless, Bitcoin off 4.6%. We jump over to yields. Bigger things going on in the market right now, but it's a product of it. Now we have the 10-year. We might be a little 4.05. Where are we? No, we're at 4.04. 4.04. Let's see what the low yield was this morning on that spike. Basically right there. We got the 4% this morning, 113.75. You got lower yield, the 10-year at 4.04 right now, and you jump over to the dollar, holding up well. As we have lower yield, you get dollar strength at 99.36. And speaking of strength and volatility, how about gold, man? 41.90 down to 41.23. No, a little bit lower, 41.16. And we get some volatility overnight. That's a 5-minute bar. You put it on a 15-minute bar. All things considered, folks, we're right back to where we were yesterday afternoon. You got quite the acceleration into the overnight session at 2 in the morning. But gold sitting pretty healthy at 41.25. 41.25. My goodness, right? There's so much in this market, man. How about that run to silver? We talked about the short squeeze in silver yesterday. Boom. You get a run up to 52.50. In silver, you pull back though, and we're actually now below where we were the close yesterday. Silver down almost $1 at 49.46. You take a look at the daily on silver. The volume started last Thursday, folks. Okay, these volumes, you check out gold. On a weekly basis, that's a daily, so you can highlight the selling that began last Thursday. All right, on a weekly basis, we have dramatic volume to the upside, man. It just doesn't stop. 1.7 million contracts last week to the upside. Your weekly bar, okay, yeah, it looks like we've had quite a pullback, and we have, but on a weekly basis, it just keeps going up. Now, we did 1.7 million contracts last week, okay? 1.7. Yesterday, you did almost 300,000. Well, if you do 300,000 a day, that only puts you at 500,000 contracts. So you can see it's going to be very difficult for gold to trade higher on higher volume when you did 1.7 million contracts last week. Okay, that would be akin to something like 350,000 on a daily basis, and you did 275 yesterday. So now we got to average 350,000 a day plus add 75 somewhere in there. Hey, that was only Monday. We got 4 days left to go. But yeah, we got gold down by $4, but we are trading at record highs today of $4,190. Remarkable, man. All right, folks, we're going to come back. We're going to talk some markets. We'll take a look at the volume. Quite the selling on Friday. We bounced higher on lighter volume yesterday, and today we're giving back a lot of those gains. Look at that bar. On a candle, we're almost engulfing the entire day yesterday before the trading day even begins. Markets in the red. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps right now well off the lows. We hit a low in the pre-market of 66.05, so we're 32 points above those lows in the S&P, almost 0.5% off the lows. You were approaching 1.4% in the red in the pre-market, but yeah, check out that candle, man. You engulf all of yesterday, that's not going to be a good formation, and we are 10 minutes away from the opening bell, as in watch out for an escalation in either way. We're going to have a day of buying or selling. Selling's the predominant so far. If you ever get an acceleration back to the lows of yesterday and take out what we did yesterday, back to the lows of Friday and take out yesterday, depending on the volume, of course, but that's a bearish formation, folks. Just take a look at the NASDAQ. Same deal. Okay? You've almost taken apart the entire candle, and you're talking about a candle yesterday where you have the opening of the candle literally to the tick low. Right, 24,542. So it's about 80 points below where we are on the NASDAQ 100. The Dow, pretty close to the same exact formation. And you check out the Russell right now. Russell, quite a bounce yesterday on the Russell. We're well off where we were in the lows of Friday. Lows, you were at 2283. The Russell's a solid 2% above there still, but we're off by 1.2. Russell, particularly volatile. All right, let's jump over to the banks. So we kick off earnings season, and it seems like banner numbers, but a story of expectation, man. Look at this. So, first of all, JP Morgan just traded from $200 on their last earnings to $300 at these earnings, right? We're at 306, but yeah, you talk about JP Morgan. Crush estimates is how they put it. Well, you better look at what this stock is doing, folks, because this may be the story of this earnings season, okay? They did crush it. Look at the action in the pre-market. Right? Now, the market's in the red, but you come out with the numbers, you get an initial spike, and you give it up. JP Morgan's in the red right now. Imagine if they did not crush it. Okay? Nonetheless, the busiest quarter for the initial IPOs since 2021, 16% jump in investment banking fees. Markets revenue climbed 25%. They were predicted to increase 11 and 17%. So IPO value, 16%, the market was looking for 11. Markets revenue climbing 25%. Market was looking for 17%. Okay. That markets revenue was almost $9 billion. Investment banking fees, $2.63 billion. Boosted by a 53% jump in equity underwriting. Well, as they say, shares are already up almost 30% this year. As for costs, the bank spent $24.3 billion in the quarter. Full year adjusted expenses, $95.9 billion, up from $95.5 billion in July. Now, in terms of all the things that they had to say, okay, one of the things that they are seeing is some softening. And it's not just an anecdotal statement off the cuff remark. $3.4 billion in provisions for credit losses, slightly higher than what the market was expecting. Okay, generally resilient, heightened degree of uncertainty is what he refers to the economy as. Some signs of softening, particularly in job growth. There continues to be a heightened degree of uncertainty stemming from complex geopolitical conditions, tariffs, and trade uncertainty, elevated asset prices, and a risk of sticky inflation. That's a summation of all the risks out there, and it's a good one. So we'll see how JP Morgan trades this morning. Big numbers, but digesting. Okay? I mean, you just traded not only this year from 200, but how about from just 2 years ago at 135? So expectations, the story is JP Morgan. They're going to open lower Now, you could make the case if the market was higher, right, they're going to open by only 6-7/10% in the red. Nonetheless, okay, we jump around some of the other banks. Citi, with their numbers, they're basically flat this morning. You jump over to Wells Fargo as well, in the green. From 79 to 82, you're up by about $3. Profitability. Now, they can increase their assets, so this one's going to be particularly volatile. The lender now aims to achieve return on tangible common equity 17 to 18%. They were previously guiding to 15%, right? Profitability. Return on tangible common equity. And that measures how efficiently a bank can generate earnings available to shareholders, showing the pace of growth and at what cost. Net interest income, they miss estimates. $11.95 billion. The market was looking for 12.01. They maintain their guidance throughout the year. Yeah, and so that return on, how do they? Tangible common equity. Okay, return on tangible common equity. ROTCE, ROTCE. Taking out some of the uncertainty, right? As they enter a new phase of growth, with that asset cap removed in June, the bank also plans to manage down its common equity tier 1 ratio to 10% from 10.5 to 11. All right, and then we jump to Citi. I mean, it's strong numbers, and these banks are barely trading higher. You got Wells Fargo trading higher, okay? But look at Citi as well. Beats in every division. Revenue beats in every division as compensation costs climb. Total revenue, 9%. Talk about a run, baby. Traders in both equities and fixed income products beating analyst estimates, pulling in a total of $5.6 billion, up 15% from a year earlier. Expenses, though, up almost 10%. Now, they have a lot of expenses selling their stake in Banamex ahead of a public offering. Higher spending on compensation and benefits as the battle for bankers goes on. Earnings per share $1.86. Basically in line with estimates. Fixed income, $4 billion, up from 3.6, and equities at $1.5 billion. How about those fixed income traders, man? Take a longer term look at this chart. I mean, all these banks, right? The run from 2 years ago, we just looked at JP Morgan. You got Wells Fargo from 35 to 90. You jump over to Citi from 38 to 96. Citi was just trading at $56 only 6 months ago in April. So a story of digesting the gains as we come into an important earnings season. And I say that as in, boy, you think they have to digest the gains. You go back to some of these tech companies, man. We got NVIDIA shares. We check in on some of the Magnificent Seven as we come into the opening bell. Down about $3. CoreWeave ain't in there, but I always want to check on them, particularly volatile. Not one of the Magnificent Seven just yet. Not even close. Okay, and I say just yet, kidding. CoreWeave down about $4 right now. We jump over to Amazon shares. Everything going to be in the red this morning. Down about $5. Microsoft shares in the red as well. We got S&Ps off by 63, NASDAQ 100 off by 301. We're coming back for the opening bell, folks.
Playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN. educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open, and the S&Ps open up almost down 1%, down 0.9, we'll call it a percent, down 65 points or 0.97%. NASDAQ 100 off by 1.3% right now. Banks out with their numbers this morning, and we got so much going on, we haven't gotten them all yet. Goldman Sachs out with their numbers, down by 2.9%. You see the volatility as they're out with their numbers at about 7:30 in the morning. And these banks, a story of expectations. Every headline is like rosy as can be, but guess what? It better be rosy as can be. And I say that as in I just showed you all the others. Goldman from 300 up to 825 over 2 years, from the April low of 450 up to 825. We came into those numbers at about 786 on Goldman. You get into the numbers, beats estimates, better than expected investment banking, and that bond trading, the fixed income desks, right? Profit up 37% from a year earlier. Well, you better be, man. These companies have almost tripled in value over the last 2 years, folks. Revenue rising 20%. Equities traders underdelivered, compared with expectations, $3.74 billion, but $160 million below estimates. That's another way of saying $0.16 billion, right? So they should have come in at about $3.9 billion. For equity traders, what are those equity traders doing? They should talk to the fixed income desks. No, fixed income traders crushed it that past quarter. I mean, look at the expectations, right? You want to talk about expectations in this market, folks, for the current $12.25 versus $11 earnings per share. Revenue, 15.18 versus 14.1. Profit surging 37%. Investment banking jumping 42%. But yeah, equity traders missed the mark by $160 million. And what happened? Shares get punished this morning, down by 3.2%. The market off by 1% right now on the S&Ps at 66.27. We jump over to Stellantis, so the Jeep maker. So they're going to overhaul the Grand Wagoneer lineup under a brand turnaround plan. Yeah, the top-end Grand Wagoneer lineup for the 2026 model year, they're overhauling it in a years-long turnaround plan. a new extended range powertrain, simplified model lineup, all under the Grand Wagoneer name. Now, these vehicles are going to top $111,000. Since launching in 2021, the Wagoneer, Grand Wagoneer have not lived up to expectations. Initial production of the vehicles riddled with problems. Dual nameplates for the same looking vehicles confused customers. You know what confuses me is $110,000 for a new vehicle. Folks, go buy a beautiful vehicle for $24,000, okay? Spend the other $90,000 putting 30% down on a house in beautiful Lakeland, Florida that's brand new, okay? You buy a $300,000 house, you put $90,000 down, you get a $210,000 mortgage. Hey, you're making $111,000. These are beautiful vehicles, folks, okay? But yeah, the 2006 Grand Wagoneer is going to start under $65,000, including, so they're changing things up, man. The initial pricing, man. So they blew it with those big prices. They're going back to $65,000. It never made any sense. And the reason why I say it is, of course it makes sense. There's fantastic vehicles. But the Jeep name and only operating around $100,000, one of the other vehicles that I love. So they got an overhaul going, and rightfully so. And boy, you take a look at this chart, okay? Stellantis, STLA is their symbol. Yeah, stay away from this one for right now, folks. Okay, that's your monthly. You're at a critical area of $10. You break $10, you're going to 5. And you got all this selling out there from their last earnings in July. Take a look at the daily. We were just at $11 and change. You're at $9.66. You're down by 4.9%. You look at some of the other vehicles out there, just personal preference. One of my favorite, the Yukon Denali. But they had a lineup. I think Jeep really outpaced themselves without being a differentiator. All right. Here we go. Let's check out some of the leaders. Not the price action you'd want to see. So much for yesterday's pop in NVIDIA shares. You're trading at 181 right now. We're back in this consolidation area. And this consolidation area was for August and September. Okay, you chopped around between a price point of about 168 and 185. And yeah, NVIDIA. Now that bounce. Check out the volume on the NVIDIA bounce yesterday. Not exactly convincing, right? Not even close to what we did on Friday. But yeah, also know what we had on Thursday when you were making those highs as well. Broadcom, quite a week for them. And yeah, that's how you like to bounce. You see that, folks? I imagine that when my dad was developing his time in the trade system, you see a chart like this, okay, and it just screams more strength than NVIDIA. It really does. You had all that buying yesterday, right? We're not near the lows of where we were. You didn't even come close for the selling you had on Friday versus the buying that came into this equity yesterday. Now, they're doing deals with OpenAI yesterday, okay, but volume don't lie. You got Broadcom down by 3.5% right now. Jump around to some of the other tech stocks. Microsoft off 1.3% right now. Google in the red by about a percentage point. Yeah, check out that selling on Friday on Google versus the bounce yesterday. Thursday, Google, 19 million shares. 22 million shares, we bounce on 12. Yeah, Amazon pronounced selling, but not as pronounced as you saw in Google there. All right, we'll take a look at the gold chart. Pretty remarkable. You're going to get a red day in the gold chart. We're now $62 off of the highs. And man, look at this. We're going to take out yesterday's high. We're going to trade lower, and we're going to take it out with volume. 296,000 contracts yesterday. We're already at 289. It's going to be a big day. All right. Keep those spikes up in that gold market, folks. Just jumping around some of the gold equities. It's been quite a run, and we will have pullbacks in this market. We're flat right now, basically across the board, as gold is flat. Not this market, though. We are trading lower, folks. Yeah, I bet that triple NASDAQ is doing some big things. Now, here's This is the triple inverse NASDAQ, folks. The only thing I'll say is, this thing went from 1660 after the close on Friday to being below 15 by 1 o'clock yesterday. How's that for a 10% give up, right? But guess what? We're pushing back into that area where at 1582, markets are escalating, man. Coming into earnings season right now, and it's going to be a story of expectations. So China escalates the U.S. trade fight with curbs on shipping. This is what really escalates things overnight. China sanctioned the U.S. units of a South Korean shipping giant and threatened further retaliatory measures on the industry. The sanctions target 5 U.S. units that helped fuel a slump in global equities. We'll talk about some of this, folks, when we get back. Tensions escalating, markets in the red. Come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and we have markets continuing to drive to negative territory since the opening bell about 12 minutes ago. We just made session lows at 66.05, and yeah, markets down 1.3% in the S&Ps. You take a look at the heat map. Some of the sectors that they're hiding for safety, folks. Well, you got Walmart, Costco, right? Procter & Gamble, Wells Fargo, the winner of the banks on their numbers, up by 3.3% this morning. Banks with big numbers, but trading lower. JP Morgan, down by 3.3% so far this morning. Amazon, Tesla off 3.2 as well. Micron off by 2.8. Oracle, particularly volatile recently, off 3.7%. And there's Goldman off by 4.4. Jump to the NASDAQ 100. AMD and ARM. Two of the only equities in the NASDAQ 100 before you get into Costco, Pepsi, and O'Reilly. All right, let's take a look at Walmart as we're trading higher this morning. Walmart shares? What do you got going on with Walmart? Here we go. Shame on me. How did I not know it was coming, folks? They partner with Oprah and OpenAI. You can't make this stuff up. We making this stuff up? Walmart OpenAI partner to offer shopping through ChatGPT. I don't think the phrase "we live in interesting times" encapsulates that. Walmart's like, hey man, why aren't we making headlines? And of course they should. They're one of the biggest retailers in the country and the world. They should be teaming up with OpenAI, but now you're going to be able to shop on ChatGPT. You see the headlines here. And basically, just Walmart partners with OpenAI. They're going to launch ChatGPT shopping with instant checkout. AI-first shopping experience. Check this out. Walmart's ushering in the next generation of retail. The company announced a new partnership with OpenAI through ChatGPT using instant checkout. So you're just going to be able to talk to the computer and it's going to drop things at your door. Whew. And yeah, they're leveraging AI everywhere, but pretty remarkable. You're going to be able to pull up ChatGPT and get it done. So Walmart trading higher on a day like today, up by 1.6, and the market's not stopping, folks. Listen, you're trading short term, okay, and you got any fear in this market right now and you're not holding for retirement and you don't know where the line in the sand is, pick a line in the sand, folks. It has been a remarkable run over 6 months. Market's never seen this type of wealth generation. 2,000 S&P points since April, okay? Put a line in the sand, baby, because the multiples in this market, you see how some of the banks traded. We're coming into these earnings, folks. And boy, it's almost like if we had traded lower yesterday, that was going to be worrisome. But geez, part of me says, you know what would be worse? If we get a bounce and then you get a full takeout, right? With volume on the second acceleration. And that's what's setting up right now, man. We'll see how the volume comes in. Check in on the gold contract right now. We got gold. A little bit of a spike on this market pullback. Gold back to 41.40. 41.40. How's that? Yeah, cheap. Just empty every pocket. 111 grand for a vehicle. You see how, and they're right to think that is a great area to be in, right? Selling vehicles for $111,000. You're selling premium. But they didn't have the clout to do it. They didn't. You're talking about the marketing, whatever you're talking about. You look at this chart for Stellantis, man. All right, we jump back to the headline in terms of China and the U.S. So, yeah, this had to do with targeting 5 U.S. units of Hanwha Ocean Company. Okay, that company, of course, was in the red. Both sides have already slapped special port fees on each other. Okay, now you have sanctioning U.S. units of South Korean shipping giants. China, 35% of the shipbuilding. South Korea is 31. Japan is 26. Amazing, right? And yeah, just 1 point of contention. As they tighten export controls on the rare earths, Trump slacks back on Friday, and here we are on Tuesday with markets trading lower. All right, this one was an interesting one from Bloomberg. Early this morning, okay, Now, there's Domino's. You're up by 1.4% right now for Domino's. You're trading at 413. Check out your 5-year weekly. Okay, not exactly a rousing chart of strength. Look at the volume that we have on these trades lower, basically from where we were in earnings ago. When you were trading at 500, you come into these earnings at near 400. Pizza promotions, stuffed crust, lure consumers. Now listen, Domino's ain't going anywhere, folks. Okay? Same-store sales rose 5.2% in the quarter. 4.3% was the market what they were looking for. Earnings per share of almost $4, $4.08. $3.95 was what they were looking for. In the U.S., positive order counts behind our best deal ever promotion, stuffed crust pizza. It's amazing how these companies just promote themselves. And I say, as in, of course they do, right? It's all new products. I mean, we've seen Taco Bell kind of revolutionize that when they were coming out with new products left and right. This resulted in another quarter of strong growth in both our delivery and carry-out businesses. Now, we'll see how the volume comes in this week, folks. And the one thing I do like about trades like this, okay, I was looking at this morning, I was reading this. Now, we ordered Domino's, okay? Domino's is great. Tommy loves Domino's for a little treat. But you're talking about a company right now, folks. It's valued at $14 billion, okay? And take a look at this a little longer term. The one thing that's nice is on a trade like this, you got your back against the wall. You know, you're in Domino's, you bounce right at 398.81. 400's the line in the sand, man. You go below 400, you're going to 300, okay? But there is no strength in this market just yet. You are trading down. You're trading down with volume. All right, you got that real acceleration September 15th. You got selling out here at the highs from an earnings ago. And we're up by 2% on their numbers. They do beat. But yeah, longer term, you're sitting right where we were in 2020, 5 years ago on Domino's at about a $14 billion company. And yeah, they're making $4 a share. Okay, $4.08 a share. You multiply that times 12, folks. That's $16 a share per year. I'm generalizing, but that's just how much they made in 90 days, right? Earnings per share, $4 and change. That's about $16 a year you'll get in earnings. You're paying $4.17 for that company. So yeah, the chart looking a little dicey. Trading lower from the highs earlier this year. No bid like the rest of the market. Domino's up by 2% as they beat. Markets in the red. One more segment. Come on back, folks. We're coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We jump to yet another Battles On. AMD says Oracle's pledging widespread use of their new AI chips. That's NVIDIA's nearest rival. Oracle will put 50,000 of the semiconductors in data center computers starting in the third quarter of next year. The system will contain AMD processors and networking components. These deals, man. The pace of these deals. What's going to happen when we make all the deals and then you have to live up to them? Right? You're going to make the deals that go forward from there, I guess. But man, in the second quarter, AMD shipped about 100,000 AI processors. NVIDIA delivered 1.5 million. But yeah, AMD is trying to catch up, and they didn't specify when they expect to complete the installation, but they see it expanding in 2027 and beyond. Man, you jump over to these equities. AMD shares up by 1.8%. And Oracle dives with the market down by 4% right now. You jump over to the leader, NVIDIA shares off by 3.6% right now. Some of the other fan favorites, Tesla off by 3.3% right now. Walmart, they're doing business with ChatGPT up by 1.5%. You spiked to 106.58. Wow, that would have been an all-time high in the pre-market there. Couldn't quite hold it. Unbelievable. Very believable, I should say, right? You jump over to Target shares, up by about 0.4% right now for Target. Mr. Ellison's son, Paramount Skydance, continuing to pull back from that run it had. 16.88 for Paramount Skydance. Warner Brothers Discovery says they want more cash than what's being offered, down by 0.8. Check in on Disney. Flat this morning. And gold in the green, 41.33. S&P's in the red. Folks, stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour. Steve Rhodes at 11 with the Trader's Edge. Fast Market at 12. Larry Pesavento at 1. And you're in luck, folks. Basil, he's going to be hosting the 3 to 4 section this afternoon. Double duty. And Tim Wood's coming on this afternoon as well.